Hey everyone, I'm Tony with Clarkson Santoro, and this is our weekly real estate update for August 26th. In this weekly series, we update you on the latest trends that are occurring on our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. The current inventory is 75 homes, down from 81 last week. The average asking price of those homes was $2,001,000, which is down from last week's average of $2,038,000. 16 homes asking an average of $1,787,000 went pending this week. That is less pending homes than last week's number of 20, with a lower average asking price from last week's $1,901,000. A total of 17 homes sold this week, with an average sales price of $1,960,000. That average price was up from last week's average of $1,665,000, and the total number of sold homes was higher than last week's 7. Okay, so now that we know what our market did this past week, let's look at the key metrics that we track that help us understand where the San Ramon real estate market might be headed. The first metric we watch is our inventory of active single-family homes for sale. This number has been on the decline now for the past few weeks, and we continue to move back towards a target range of around 50 active homes on the market. As fewer new listings come on and we see the pending numbers remain high, it is likely that the magic middle number is right around the corner. This indicator score came up to 35 last week, and we will raise the number again to 38 as we move closer to a normal inventory level. The next indicator we track flows directly from the inventory levels, and that is the market turnover rate. With inventory continuing to drop, the fact that our pending numbers remain in the mid-teens is a great sign in both buyers' confidence and also that sellers will have less to compromise less on value. At the current turnover rate of 0.91, we are still just slightly leaning in a buyer's favor, but this reinforces the idea that the market is recovering quicker than we expected it to, and we should be at a neutral market soon. Last week we raised the score to 43, and we are raising it again to 46 this week. The over-under asking price is the next indicator we track. The difficulty some sellers are having is that we are only a few months removed from when their neighbors were selling their houses for $300,000 over asking in just a weekend. So learning that the average house is now closing at about 2.5% below asking price feels dramatic. The reality is that the $300 over asking price number of last year was an inflated number. Most sellers and listing agents, including us, were using a different pricing strategy than we use today. Now that homes are selling for close to asking, very few sellers are listing their homes below where the market would be willing to sell and hoping for multiple offers like we were in the past 2 years. If you look at the past 2 decades, a plus or minus 2% sales price is the norm for all but 3 years. Last week, we gave this indicator a score of 46, and this week we are lowering it a bit by 1 point to 45. If we remain in the plus minus 2% range, we are very close to a neutral market. The last trend we watch closely to gauge the strength of the market is the average selling price of single-family homes. The average sales price has dropped again this week, which is to be expected. I would expect to see the closing number to fall for the next 4 weeks, as we are just now seeing all the homes closing that went pending shortly after the market stalled. The other issue driving the lower average sales price is that there was a period where mostly lower homes were selling, so that will skew the number lower also. Last week we gave this indicator a score of 66, and this week we're lowering it by a few points to 63. The first 2 metrics we pay attention to that help us predict where the market is heading is the strength of the Silicon Valley tech industry. The QQQ fund continues to perform well after starting a decline in late March. We are now sitting in the low $300 per share price. That is a 20% increase from the low we saw in June. What this means more than anything for our San Ramon market is that buyers are coming out of the South Bay are feeling less hesitant as their stock portfolio is beginning to perform well again. Buyers' confidence in the strength of their money will always translate to more movement in the housing market. The market did dip earlier on Monday, but the midweek movement has been good. Last week, we gave this indicator a score of 46, and we are lowering it to 44, reflecting a gentle weakness in the equity market. Finally, we track the average mortgage interest rates. The interest rates stayed the same last week, now sitting at 5.13%. While that is a higher number than the exceptionally good rates we saw 2 years ago, The fact that we are seeing less volatility in the rates is a good sign. Knowing that the interest rates are going to be around 5% and not much more will also add to buyers' confidence. If you know what your loan will cost you, you can plan accordingly. Last week we gave this indicator a score of 39, and this week we are leaving it the same. Overall, the market has continued to improve in some important ways, with inventory coming down and the turnover rate increasing. For sellers, this is good for you as you can start to plan how to market your house better, knowing that if you price it competitively, that there are buyers out there looking for your house so they can call it home. For buyers, the upward movement in the market trends is not affecting much quite yet. There are still plenty of options out there for you to choose from. Your money cost doesn't look like it's going to continue to increase, and the prices are still below the peak they reached earlier this year. But I do think that next spring we will see a return to a stronger seller's market if this trend continues. So now is a good time to secure that home you've been thinking about. Last week we scored the market at 45, and this week we are raising it again to 46. It is almost completely neutral at this point, but leans slightly to buyers' favor still. I hope this weekly summary and commentary helped you understand our market better and how it's affecting you. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate the market to sell or buy a home. And if you find this information helpful, share it with a friend, hit the like button, and subscribe so you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.